Hi, my name is Javaid Kiyani from Property Coaching Club. I've got Harpreet here today, who's a finance expert. He's helped a lot of property investors out for the last 5 to 7 years.
Yeah,
Hi Harpreet, how are you doing?
not too bad, thank you. Yourself?
Yeah, I'm very well, thanks.
Good.
I just want to ask you a few questions regarding what's happening in the market today
Sure.
and what you see happening in the next, say, 6 to 9 months. So, basically, how's it going at the moment? I mean, what's the market doing? Do you see any changes in the market in the short term?
Yeah, I think we've seen a lot of improvements over the last 6 to 9 months. Certainly since last October, there have been massive changes. I think what we saw probably towards October, November of last year was a complete crunching of all finance completely. Nobody really wanted to lend. Lenders didn't really know which way the market was turning, so they didn't really want to compete with each other product-wise. What you found were lenders were pulling their rates. Within minutes, other lenders were following suit and raising the prices of products quite severely. Now we found that there's a lot more competition back in the market where lenders are competing against each other again to reduce rates rather than increasing them.
So the market's become much more stable than it was, say, 6 months ago?
Definitely. We've also seen a return of a number of specialist lenders, which has obviously been a welcome change.
Okay, that's great news. Well, do you have any recommendations for property investors who maybe they've bought their properties in the last 2 to 3 years, and I know a lot of people have managed to get huge portfolios over the last couple of years because finance was so cheap and easy to obtain. Now a lot of these guys, and I get a lot of emails about this, have got into trouble and they are losing their properties because they can't afford to make their payments anymore.
Yeah.
Do you have any recommendations and suggestions for these guys? I mean, what should they do?
Definitely. What we've seen, a lot of people have built up a portfolio of lending with maybe one or two lenders, not really spreading the portfolio amongst a group of lenders. What they're now finding is they can't refinance those mortgages, especially where they were maxing them out at 85 to 90%, or they were looking at products that didn't necessarily look at the rental income, they were just looking at their own personal income. They've struggled when it comes to yield. What I think they now are looking to do is possibly put a little bit more money back into the properties to bring the margins slightly, increase the margins slightly in there, so build up some of the equity, hopefully bring some of the monthly payments down. Also, what we found are standard variable rates at the moment are a hell of a lot cheaper than the fixed rates that they were currently sticking on to. So where somebody might have been on a mid-5 product, let's say 5.5%, 6%, they're finding that they're coming off that rate and they're actually on maybe 2%, 2.5%. I've heard of people with maybe £1 or £2 to pay per month interest only on the mortgages, so that's obviously helping cash flow wise. What a lot of people need to do with the additional cash flow they're getting from there is to try and put that back into the mortgages that they've got, try and maybe some of the larger size mortgages that are just about scraping rental cover, possibly trying to bring those loans down slightly to increase the overall yield of the portfolio. Also look at lenders outside of the traditional high street lender. There are a lot of specialist commercial lenders who are offering excellent rates. They're also doing very high loan to values. What you will find with most of these lenders, however, which is where a lot of property investors fall short, is that they are looking for evidence of you being profitable as a buy-to-let landlord, and that you're running a successful business.
So would that be in the form of accounts?
That would be in the form of getting proper accounts done, where you've got the P60 returns and the tax returns there, you've got the proper accounts for the last 2 to 3 years. Well, what a lot of people did over the last 2 years, let's say, built up a massive portfolio and they haven't submitted their first year's worth of accounts.
Yeah.
What a lot of those guys did was basically pull out all the cash back and then plough it back into the business to show massive losses, so they didn't actually want to pay any tax. It's probably a bit of a mistake because what you're trying to show is that you've got 20, 30 properties in your portfolio, built it up over 2 or 3 years, but actually you're making no profit. So as far as the business goes, yes, it's capital backed, but you're actually not making any money. So why would a commercial lender want to touch you?
I understand exactly what you're saying.
You know, whereas if you've got a good profitable business, almost like a lettings agency, it's asset backed. A bank will sort of be, jumping over itself to try and compete for the business from you.
Yeah, traditionally, I'm sure you all know that commercial lenders have always been more expensive than buy-to-let or residential products. And you're saying now they've become very competitive. Is that also on the loan-to-value as well?
I think the loan-to-value, they are slightly higher, possibly 5%, maybe even 10% higher on the loan-to-value with some lenders. They won't do it for every single mortgage that you do. They'll want to have a fairly balanced portfolio. In terms of rates, you're probably looking at a saving of between 1 and 1.5% on the rate.
Okay.
So it can be quite a significant difference depending on the size of the mortgage.
Okay, so basically you may need a bigger deposit, but it'll be a monthly saving for you.
You might not need a bigger deposit.
Right.
It might be the same deposit, but overall, what they're looking for is probably to have a balanced portfolio with the overall lending throughout the mortgages is between 65 and 70%.
Okay.
Whereas the traditional high street lender a year or two ago was quite happy for every single one of your mortgages to be maxed out at 85%.
Okay.
What it does do is helps you with the yield, because obviously more equity in the properties will in turn result in a higher yield on your properties, and over the long term that's only going to benefit yourself as an investor.
Okay, great. What about no money down? Because a lot of questions from a lot of my customers.
That's right.
Saying, what do I do about no money down? And because the market's moving so quickly, the strategies available today are not the same as they were 3 months ago and 6 months ago.
Definitely.
What are people doing today to get no money down financing for their properties?
Right. The traditional bridge and remortgage, same day remortgage is pretty much out of the window. There are commercial lenders who will look at it. You do have to go in there, buy it with a bridging loan or buy it cash and go to a commercial lender to do the remortgage. They will look at those. However, it has to be showing up on land registry in order for you to be able to do the remortgage, whereas the traditional method with, let's say, Mortgage Express, you could do it before it was showing up on land registry.
Right.
That could take a week, it could take 2 weeks, so it's not quite instant.
Okay.
But I would say, on average, with a commercial lender, you could probably get it over and done with within about a month.
So this is from the offer made to completion?
Yeah, this is from completing with your cash or bridging loan.
Oh, I get it.
To getting your remortgage with a commercial lender.
Okay.
However, commercial lenders are notoriously slower than the traditional high street lender, so I would factor in 2 months.
Okay.
To get your completion of your remortgage to release your equity.
And during those 2 months, you obviously you put money into the deal.
Depending on how you've purchased it, you could have purchased it via a bridging loan.
Right.
There are a small number of bridging loan lenders who will look at the open market value.
Right. Okay.
Rather than the purchase price. It is expensive. It's not cheap. Traditionally, the typical method was to do it as 1% for 1 day's lending.
Yeah.
Now you're looking at 1.5%, maybe 2% per month. And obviously you've got legal fees and additional fees involved, so you might lose 3% out of that deal.
Okay.
Just from the bridging lending alone for the first 2 months.
Okay, I mean that's not a big amount considering.
Yeah, if you're getting a significant discount, let's say 10, 15, 20% discount, you can live with that.
Okay.
That's one method. You've got several other methods. Another method has been via, some people call it an RX1, some people call it an options type agreement.
Okay.
In that method, you're looking at getting an options agreement. That there are 4 different parties involved. You've got a bridging lender, you've got the buyer and the seller.
Yeah.
You've also got an agent, which I'd put it in inverted commas as an agent, who effectively acts for the transaction.
Right.
Now, it's quite a complicated scenario. There are a couple of different specialist people out there that offer that type of finance. Best one I would recommend is property-system.com to get the full breakdown of exactly how that works.
Right.
Essentially what you're doing is you're capital raising for your deposit from one of your existing buy-to-let properties, which is one of the keys. You have to have an existing buy-to-let in the background to capital raise for your deposit. And you also have to have a separate agent involved to complete the transaction with the seller for the additional option for the cash back.
Okay.
It's quite a convoluted way of doing things, but it's a legal way of doing things.
Yeah.
Because a lot of lenders have banned a lot of the loopholes that some of the new build developers were working, such as sub-sales. A lot of lenders now specifically state on their criteria you cannot do sub-sales.
Okay.
Another good method is
just for our listeners, what are sub-sales?
Yeah, sub-sales basically where you have a company that will buy the property at one price and then offer it to you at another price and forego the discount. Basically, it's almost like a gifted discount via an intermediary or a company in the middle.
So basically, you'd introduce a middleman into the equation.
So one person would exchange contracts in the morning and then sell it on to you in the afternoon.
Oh, I get it.
That's essentially how the traditional sub-sale method would work.
And obviously, there's a fee for that as well, isn't there?
There is, yeah. So they would take a percentage cut out of there, but obviously it means that you wouldn't have to put the deposit in.
Excellent.
That way has been specifically banned by a number of lenders, although we still have heard of a few people trying to go via that method. Another excellent method, which is probably one of the key areas that's going to boom over the next 12 to 18 months, is this whole lease options thing and the rent to own. I think it's one of the best ways to do. It's not quite no money down, but it is. I mean, if you can acquire a property for a pound or £1,000 and you get to control it for a period of time, you then get to sell it on, or you get to buy it yourself. Effectively, it is another no money down method, and it's probably the best one to go for, where investors who have bought heavily over the last 12 to 18 months, they're now finding that they can't get credit anywhere else despite having very good credit. They're just maxed out on all the loans. This way you don't actually have to get a loan to acquire the property.
So with lease options, obviously they've been around for a long time.
They've been around forever, yeah.
And what I'm trying to say is, there's a lot of ways you can buy property.
Yeah.
No money down, if that's what you want to do.
Definitely.
And a lot of investors, we just haven't got the time to basically keep an eye on every single product on the market.
Yeah.
So just for the benefit of listeners, if you do want any more information on no money down, if you drop me an email, I'll send you Harpreet's details, and then Harpreet can deal with them direct.
Yeah, sounds great.
Thanks, Harpreet, for your time.
Thank you.
I'll speak soon.
Okay, take care.
Bye.